Thank you for joining FTMIG as we host Gianni Kovacevic on our Catch Up with Karl edition. Gianni is a Croatian-Canadian investor, author, and futurist who has enlightened audiences around the world with his unique brand of storytelling. Drawing from over 2 decades of research, he is frequently interviewed and known for the colorful way he decodes complicated modern themes. A graduate of electrical studies from the British Columbia Institute of Technology, Gianni is an expert in the analysis of global energy, and he is a sought-after keynote speaker who empowers audiences into appreciating the impact technology and renewable energy are having on every aspect of society. His best-selling book, My Electrician Drives a Porsche, was launched by way of a one-of-a-kind journey across America in an all-electric Tesla. Now credited as the world's first zero-emissions book tour, fluent in English, Croatian, German, and Italian, he makes his home in Zagreb, Croatia. We hope you would enjoy, and please join us for more great content.
Thanks, Ashley, for that intro. And joining me now is Gianni. Gianni, thank you very much. And I believe you're coming to us from Croatia.
I am indeed, not far from where Nikola Tesla was born. I am Croatian. I do live here now full time, but I will be traveling actively again this year, mostly in European markets, talking about copper, lithium, electrification, some of the things we're talking about today.
Yeah, and a lot of investors are very interested in those, in both of those. Now, I remember the last time I did an interview with you, we were driving around in Vancouver, and you had mentioned to me at that time, Copperbank. Copperbank was a publicly traded vehicle at the time that you were a big investor in. Is that accurate?
That's correct. And I guess it was a bear market speculation where me and a group of guys were buying what we deemed to be well-situated, high-quality projects that had a lot of money spent on them. And when the market would normalize, we were speculating that all-star investors and technical people would come and take the projects on and move them forward and further de-risk them and take them through development. That's exactly what happened. I retired about a year ago when Paul Harbidge and Russell Ball came in. Long story short, it was about a 10-bagger. If you had bought into the Copperbank thesis during the bear market lows last time and rode the wave up, it would have been a 10-bagger. So everything's come off. We all know about that. And the question is, where are we going next? And I still think that this is not going to be a protracted bear market, and I'll give you the evidence why.
So selfishly, you're basically saying I could have retired with you, because when I interviewed you in that car, I know the price of copper was low. And it's funny because as copper was rising, I thought of you, because I remember thinking to myself, wow, if copper ever rises, Gianni's got a really good position here. So congratulations.
You would have done well on a handful of names. I mean, even Capstone Mining went from 50 cents to $6 or $7. You know, all the copper names, when the market was epically bad, that was the time to buy. And so where are we now? You know, and I think people are very nervous. I would think a lot of the people that listen to your show invest or speculate in junior mining shares, probably.
Yep.
And so let's give them what is really a bad news, but also a good news story. And so it's all interwoven into one sort of like, what the hell is going on? And what's the problem here? Because there's so many different things happening, overlapping each other, and you have to sort of put them all together.
Yeah, let's get into it. I mean, copper obviously has come off. I don't know if you pay attention at all to CPI numbers and all the reports that came out today, but I'm sure it does play a role in how copper is going to be affected in the future. So, all right, so Copperbank is now bought out. Now, where are we headed with copper?
This is a pretty deluxe answer I'm going to give you, because like I told you, this is a bad news, good news story. And it's crystal clear that, commodities are, manhandled. I don't want to use the word manipulated, but certainly, they're put in a way where nobody in the world wants to pay a lot for commodities, including copper. So why do these things go to hyperbolic highs, and why do they crash to devastating lows? The speculator gets involved. And this has become, you can compare what's happened in the oil markets and gold markets and everything else, but just look what happened to nickel. Remember that big nickel trade, and they had to reverse all the trades? They were caught out. Why?
Yeah.
People that have no interest in owning nickel, they don't want to take future delivery. They're trading in something that they have no real interest in, and they're entangled with people that actually use the commodity. The LME reversed the trades. They were caught out. So now that this war has occurred here, the Russo-Ukrainian war, which everyone sees that every day. We're not going to talk about that, but it certainly is a political motivator here and what's going on in the world. But if you turn the clock back to April, May, June, wheat, talking about the commodity wheat, it probably, I don't know, has it ever been more constrained at the time, May of this year, was the future wheat deliveries, were they ever going to be more constrained than at that time? And what happened to the price of wheat? It was collapsing. You couldn't get the wheat, but the price of wheat was collapsing. Why? Because people are trading derivatives. They have no interest in owning this stuff. They're not going to want to own it. And it's an option. And the same thing, if you look at the wheat chart and the copper chart, they are identical. Week by week, they collapsed at the exact same time because people that are trading in this commodity have no interest in owning it. And they were speculating before that it was going to be a very tight market and you're going to get these super premiums. Never manifested itself. Meanwhile, when you look at people that actually are using these products, the copper market in China is still very tight. And China, I say, because China is the world's largest consumer of virtually every commodity, but specifically copper. 50% of the copper that's produced in the world is consumed in the Asian economy. If you want to combine China, Korea, and Japan, certainly more than 50%. And they have no interest in these high prices. So yet the market is still tight, and the negativity. We are at peak negativity. I don't think it's ever been this bad. And you can tell by the fear, the global press releases, governments and media, they want to scare people. They want people to stop buying things. They want to sedate inflation. And that's only going to be possible by that happening, which we'll see how that plays out in the course of the next weeks and quarters and months. But the price of copper, we still have not solved anything. And are we in fact going to hyper electrification? This is something I've been talking about for many years. It is happening. And I think that this is the high price of oil and the way energy is so constrained and the way the future delivery of all commodities, particularly oil, is going to change forever. What do you think Japan is doing, or Germany? With these high oil prices, they are accelerating their pivots towards different types of modern energy, and that is electrification. So you're going to see the capex for everything that operates without fossil fuels. I'm talking about electrification, the way it's going to have to be created so we can power these vehicles that are going to be created, running off electrification. The CAGR growth rate for the demand of copper, even with a recession, recessions don't last 10 years. So I don't care about a recession that's a quarter or 2 quarters. And by the way, historically speaking, when every single person, including the barber, says we're heading to a recession, by the way, we are already in a recession. Talk to anyone. Go back to May or June or July. The world, we are in a recession. So when the headline comes out that we're technically or statistically in a recession, that's probably already the fact that we're already probably out of it and moving forward. But recessions don't last 10 years, Karl. They don't last 5 years. A recession is 2 quarters of negative growth. Okay, we already have that. You can tick those 2 boxes off already in real terms. Talked about the Joe lunchbox on the street. So when the capex for this pivot to energy continues, even with the recession sort of undermining what's going on right now, the CAGR growth rate from copper is still going to be positive. It's going to be very strong in some periods over the next 3, 7, 10, 15 years. I cannot say the same for oil. Anyone that thinks that the world economy is going to continue to pay, 3, 5, 7, 12 years out from now for high oil prices is delusional. This is something that we are now going to go into ultra conservation and adoption. And nothing happens in one day. It's all millimetrical progress, but it's going to be, when you look at this, as I've already said, some years in the future, the demand for copper is going to grow exponentially, and the demand for oil is going to continue to be sedated. And we have not built any new major copper mines. So if we want more copper, and I believe the answer is yes, the global economy is going to require more copper, you need to incentivize those future projects. And very little is possible, especially with the confidence when you factor in the bankers. What is going to go into production when copper is $3 or $3.50 a pound? Very little. So this eventually will come home to roost. And I think that's what now's the time for people, certainly not to blow their wad and spend everything on a junior mining share, but certainly you need to be interested. You need to know the DNA of how your favorite copper stock behaves. And if you've seen the price performance over 3, 5, 10 years, however long a copper junior has been public, with a real project, real team, cash, not going to go bankrupt. And then what's the high, what's the low? We are at a level for a lot of these juniors where they're at their, if not all-time lows, certainly multi-year lows. You at least need to be interested now and following these things very closely, because fear happens over a long period of time and greed happens very quickly. As Robert Friedland always says, like a school of fish, they just go like that. All of a sudden, you've missed it. You see a stock that was at $2 goes to 30 cents, and you sit there and you wait, and it goes to 29 and 35, and you're waiting on the bid at 25. And next thing you know, the stock, it's 50 cents. It doubles very quickly. Yeah. And you're sitting there for a penny to, it's not going to a penny. It's not going to 2 cents, that the stock I'm just fictitiously talking about. So who cares? If it's got another 5 cents of downside, buy more. But you need to start, taking a look at these things, because people have cash. We know that. There's no liquidity in the market. There's no, look at the TSXV. Just go to Stockwatch and click the TSXV over 1 year and look how the volumes collapsed in April. We're trading at 10 or 15% of where peak volumes were. So that's breathtaking. This is almost unprecedented.
Yeah, Gianni, I love your passion and most certainly your conviction. And obviously Copperbank in that situation, it validates your conviction and your passion. So I think everybody really needs to pay attention to this interview. I do have a question on copper. Is there a substitute for copper?
The only thing that we can use, technically speaking, is aluminum. And we have always used aluminum and copper to build the world's electrical networks. We'll continue to do that. And in fact, if this electrification dream occurs, like governments and industry are professing, we cannot do it all with copper. It's going to have to be done with aluminum and copper. The problem with aluminum is it's far less efficient. So you need a lot more of the aluminum. And then, of course, certain things cannot be fabricated from aluminum for certain products, meaning when you're integrating alternating current, which is the way the world's electrical systems are typically delivered to the consumer and to industry, and backup battery systems. What's a battery? Direct current. That interface happens with very thick cables. When you're talking about direct current, you're talking about high amperage. When you're talking about high amperage, you're talking about thick cables. When you're talking about thick cables, we're talking about copper. It's done for ease of installation because we can make copper cables with very fine strands, so it becomes very flexible. You cannot do this with aluminum. And imagine if a copper cable was this thick, what would the aluminum one look like, right? Cannot be done, will not be done, not ever will it be done. But the only substitute that industry can use is aluminum. So we will use both of them. We are going to continue to use copper and aluminum. And the world's largest publicly traded company that produces copper is Freeport-McMoRan. Richard Ackerson has been telling people over the last few years, we cannot deliver enough copper to electrify the world. It will be done with aluminum. This is not something to be scared of, but there is a price incentive. So in that price incentive is about 3.5 to 1, meaning if the price of aluminum is $1 a pound and the price of copper is $3.50 a pound, the price-wise it's equal. But if aluminum was to go to $1.50 a pound, well, that's like basically saying copper is $5 a pound. I will submit to people that the price of aluminum and the price of copper will roughly track each other, roughly, on a 3.5 or 4 to 1 ratio. So it'll even be exacerbated where at times in the future, even though it's more price efficient to use copper, they're still going to use aluminum, even though it's the more expensive and the stupider way to go, because there won't be the copper. We physically will not have the copper in the global market. And there's going to be very little euphoria, going, no matter what happens to the copper price. And let me just illustrate this point to you. So let's go back 20 years and picture in the theater of your mind the copper price. The all-time inflation-adjusted low was in the early 2000s. Copper was 65 cents a pound back then. Could you imagine? And then the copper price climbed for the first time to $2. There was euphoria in the streets of Santiago, Chile, Lima, Peru, and Tucson, Arizona, these big copper producing regions. But they did not believe it was going to be sustainable. And so what happened? Copper went to $4 a pound. And that was around 2005, 2006. and then it rolled over. And then we had the 2008 financial crisis where copper went from $4 to $1.37, mega collapse, like unbelievable, V-shaped recovery, went back above $3 and hit the all-time high of $4.55 in 2011. And then the price rolled over and collapsed to $2 until Trump was elected. And now when the price finally went to $5 because of many factors, ran out, inflation and speculators, pushing it to a higher level than it probably deserved at the time. And now we're at 350 and people are nervous. What am I trying to tell you here, Karl? 20 years. I'm seeing higher lows in that timeline. Yes, but when you're talking about when is there euphoria in the market, this is 20 years I just talked about. Yeah. And the copper price was almost always above $3 and it was often above $4. But if you calculate those times where there was euphoria in the market, not even a mania, but just a euphoria in 20 years, you would have a hard time counting 3 years in total. You'd have a hard time because the second the copper price rolls over and now it's coming off, you're climbing a wall of worry. There's no euphoria. The euphoria happens late in a peak and nobody in the world wants to pay high copper prices. They're all willing it. They're willing it to roll over and the speculator will always oblige them. Now, mathematically speaking, 20 years, about 3 years of euphoria, which means about 15% of the time, that's it. That's all you get. 85% of the time, it's either misery, a bear market, climbing a wall of worry, or boredom. 15% of the time, you have euphoria. And we had euphoria, and we built Copperbank for the inevitable euphoria that would come, and it did come, and stocks went up 1,000%. Now, here's the good news. We went through 6 or 7 years, in fact, more, of destitution, of a bear market, of despondency. And we've only went through about a year. This, even though 15% of the time is euphoria, what I'm trying to tell you is that it's going to happen quicker than people think. When we look back at time, I believe you're going to look at 2023, 2024, going back to 2000 or 2020 when the copper price finally took off. That's going to be concentrated. Most of the euphoria in this bull market in copper is going to happen in a compressed period of time. You're not going to have to wait till 2030. Now, I'm forecasting that. That's a bit of a guess, but that's just when I look at the tea leaves and if you understand how the sausage is made, you know, we are not out of it. No one really developed anything of significance or announced that they were going to build anything of significance. We have not saved the day. We are going to have to go through another peak, a euphoric peak. It's going to pass the old all-time high. We have to look at inflation and what's the value of a US dollar now, not what it was before. Remember, the value of a US dollar back in 2010 is nowhere close to what it is today. It would not surprise me to see copper at $7 or $8 a pound. Now, inflation adjusted, that's like being $4.50 a pound 15 years ago. So it's right. Nothing fantastical. And that is going to be one of your mania phases. And that's where fortunes will be made, in my opinion, by owning high quality copper juniors. But you have to follow this. You got to follow it like a Harlequin romance. You got to be current week by week, month by month, and know who's who and who's really developing a high quality project. And just look at the DNA of any copper stock. What's the high? What's the low? How much? Where do they raise their cash? Where are the warrants? Where are the boogeymen? You know, and I think that people should still be looking at, and of course I still own a lot of it, Copperbank became Faraday Copper, run by this all-star group of guys, raised all the cash they need at 80 cents a share, and it's come back to 40. They didn't even pay fees. They didn't even issue warrants when they did their financing, 4 months ago. It's amazing. Stock is less than half price, but the story continues. So I think that's something people need to look at.
Value, Gianni, you've just provided an enormous amount of value here. Absolutely. So higher highs and higher lows for copper. You're definitely ahead of the curve. I can see why you're a successful investor. Absolutely. Now, I do have one more question on copper, and then we can maybe get into lithium and another project that you have going on right now. So is there a floor price on copper where it is no longer economical to produce? And are we there right now?
Well, there's about 800 different groups that produce copper around the world. And Chile as a country is the largest producer of copper. Peru is number 2, China, United States, Australia, or other countries that produce it. And of course, Congo is the big new story on the street with Robert Friedland's Ivanhoe now having that world-class project, which is going to be producing, I think, some 400,000 tons a year next year. So really already a top 7 or 8 copper mine in the world. Amazing, amazing story. Every project has a different cost curve, but what we look at is for 90% of the operations that produce copper, what is their break even? Now, there is such a thing as the world's most efficient copper mine. We're not talking about that. It's been paid for a long time ago. It's got really high grades, great metallurgy. Their cost to produce a pound of copper might be $1, $1.50, you know, but the average would need, this 90% need around $3, and you could argue $2.80 or $3.20, and then they start to lose money. But it's this 10%, it's the 10% of operations that do not make money. And right now it's already difficult for a lot of this 10. And as we get as the copper price goes to 340 and 330, as we've seen it happen in the past few weeks, you know, now they keep operating because they're not going to shut down a copper mine. It's too expensive to turn off. You just keep it going, and you'll see what happens, and you can fight the fight over a few quarters, but they are not making money. This is not sustainable. If 10% of copper supply goes offline, we have a huge problem. So it's going to be a clumsy sort of situation. But to answer your question, about 10% of the producers out there are having a hard time of it. And of course, probably 5 to 7% are actually losing money every day. They wake up, go to work, produce copper to lose money. That is not sustainable. And so I think we'll see this all come to a head. And of course, oil prices keep going higher. This is the biggest input. The biggest input. It doesn't get better. It's not getting easier. And then when you're talking about people that actually fabricate copper, they're shutting down smelters around the world because they can't make money. The electricity is too expensive. This is absurd. How can copper continue to trade at these levels? If people can't even make the copper and deliver it to you because energy costs are too high. I don't know a lot about the way they operate smelters in Brussels, Netherlands, or Germany, but I'll tell you that's not sustainable. You cannot lose money every day. Eventually, there has to be a higher margin. And we already see this in China, where same thing I was talking about nickel, wheat, and copper, and the price of copper collapsed, couldn't get it. Couldn't get a pound of copper. If you wanted a pound of copper for immediate delivery, you had to pay a super premium. This is absurd. This tells you, and it's always worked this way, the speculators run the show. Why? Because the people that actually buy the copper to fabricate, they have no interest in high copper prices. And right now, it's buy hand to mouth. You do not need to have a long-term strategy on what the copper price is going to look like way in the future, because the speculator will oblige you. And probably their thinking is the price of copper is going to be the same or lower going forward.
You've made an amazing bullish a thesis here for copper based on pretty simple fundamentals, in my opinion.
Well, let's qualify that, Carl. I mean, it's bullish with a caveat. I mean, of course, the word, every headline you see is negative. We are, the recession, inflation. What I'm telling people is be current. Understand the DNA of your favorite copper junior. And what was the highest? What was the lowest point of that stock? Where did they raise their capital? If all signals are telling you we are near the bottom or a hell of a lot closer to the bottom than we are the top, you have to start getting your toes wet. You have to. Yeah. Because they're not going to zero. They have a DNA and they're somewhere there. And when liquidity picks up, when the volume of the TSXV starts to go much higher, dollar-wise, and you have to see it on the bottom of those graphs, when you look at the TSX Venture from Stockwatch or whatever format you use, when you see those volumes increasing, that's your signal. It's go time. The money's being allocated. Right now, not happening yet.
I can feel people throwing baseballs at me, my audience, if I don't ask you, okay, I understand what Gianni's saying, but are there a few companies and management teams that you really like, that you feel can raise capital in this environment and actually have, good projects?
Well, I'm selfishly speaking, and I'm going to talk about why Faraday Copper is a compelling story to follow and own. You've got Paul Harbidge, who's a big company guy who came in, qualified the project with a deep technical team, and the stock went from 40 cents to 80 cents, 90 cents. He raised $20 million at 80 cents a share, didn't issue a warrant, didn't pay any fees. They've got the cash they need to take the project to complete the PEA for the Copper Creek project. And he's interesting because, as I said, he's a big company guy. He was the one who was running GT Gold, came in, when it was around 50 cents or 40, 50 cents, and it took it to $4, and it was bought by his the former company, Newmont, I believe, bought the project off him. You know,
that was in the Golden Triangle, right?
Yeah, exactly. So he is someone that very trusted in the industry, and when they do the work, it's highly, you know, how should I say, respected. It's looked upon as something that's done at the highest quality and with the most reliability, that what they say is there. And the project that they're moving forward, Copper Creek, has so many advantages above a lot of the peer group. It's in the lowest tax jurisdiction of any copper producing area in the world, Arizona. This is a big deal, Karl. When you're a project talking about billions of dollars of theoretical annual cash flow and the taxes that the project would pay depending on a copper price, you know, you don't want to be paying 45% taxes when you can pay 26, 27. It's a big deal. You have a project that's predominantly on private property with none of the hot button issues. Even in Arizona, we've seen Resolution having problems with the native band, and you've seen Rosemont, owned by Hudbay, have their problems with the Forestry Service and the proximity to Tucson, Arizona. So location does matter. Metallurgy,
of course,
so,
a lot less red tape.
And it's also the DNA. When I'm talking about the guys that speculate in junior mining, if a stock still has not, you know, as Warren Buffett says, you don't even need a pencil and paper to figure it out. Just look at the value. Faraday's got 120 million shares out. It's trading at 40 cents. That's a $45 million market cap with about 20 million in the bank. So enterprise value. I mean, just imagine if when I was running Copperbank, if we just magically had a team put $20 million in and started executing it where we're drilling and we're to deliver a PA in 6 months, you know, it would have went to $2 a share back in those days. You know, so it's about where a stock is. So I like the fact that all the hard work's done, the team is there, the cash is raised, and they're going to be presenting this PA in the next sort of 5-6 months. And they're continuing to drill. They're going to offer drill results. So it's a story that I believe is going to close the gap on its peer group. So it's about speculating at what's the lift. Whereas buying another name that maybe fell from, I don't know, $10 to $6, can that $6 stock go to $30? I mean, I don't know, probably less probability. Yeah. It's just easier for a 40-cent share to go to $2 than the other way around. So that's my selfish sort of suggestion, and people can do the work themselves. And I think you'll see that it compares very well to sort of a lot of the peer group there, opportunity-wise.
What's the ticker on that one?
FDY, Frank David Yankee. And they're going also, they're getting a listing on the TSX main board. That's what they've applied for. They raised the $20 million. So that should be happening in the coming weeks. That is not a negative. Going from the CSC, bypassing the venture and going right to the big board Toronto. I mean, this is going to be a story that a lot of people are going to be watching.
Yeah, I cringe when you even mention CSC. That's just brutal.
Yeah,
like
well, they're applied to go to the TSX though, so that's happening. That was done always because it was cost efficient, and the plan was always to go to the. Originally, it was going to be the venture, but now they bypassed that because the story is very senior. Raised a lot of cash with the key investors there, by the way, are Pierre Lassonde, the Lundin family, and Murray Edwards. You know, so there's.
Did you say the Lundin family?
Yeah, they're the ones that have backed the story. So they put a lot of money into it, and Pierre Lassonde and Murray Edwards.
Okay, so hold on. No, that's a big. That's
where the money came from. So that's also that's going to qualify the story for a lot of people.
Well, I hope all of our listeners go and reach out maybe to their IR company, or I'll even propose an interview to them where we can ask questions and give them some more exposure.
Yeah, I can organize that. I think it's a good idea to have Paul on your show. He can really talk about the details. Yep.
Absolutely, I'd love to interview them. Okay, so now let's move on to lithium. And do you want to tell us about this next project? So just so everyone knows, Gianni only works and focuses on one project at a time. Love that, by the way. You're hyper-focused man. You've already got a proof of concept. You've got great vision, amazing investor. You've explained, and it's all been validated. So I think everybody needs to pay attention to what you have going on here.
Yes, we started for me, the parallel company, because I was in copper, I had Copperbank, and the other key component for the electrification of the world is lithium, in my opinion. I think that's only been reinforced by all that we've seen. And it's one of the, if not the critical necessary element to grow 1000% the amount of batteries that are going to be built. It's the common bond. So we wanted to have a lithium company. So we started Lithiumbank 4 years ago, privately, and we decided to go where we believe the industry is going. Now, I'm not going to argue with battery companies, technology companies, chemical companies. We, in my opinion, the industry is not going to be able to grow 1,000% the uptake for lithium and batteries with the conventional two sources, meaning the salars of South America, evaporation, and hard rock lithium mining. Yes, there's going to be growth there. And yes, there's going to be more hard rock lithium mining, but they're going to have this technological breakthrough, which is going to come from direct lithium extraction. That's where you take brine from these reservoirs that are deep underground, and the water is brought up, what is considered to be low grade, but you're able to bump up the grade through a very simple process. We don't worry about grade when it comes to direct lithium extraction. And then you have to have the ability to move a lot of water. And then you have what comes from the second process. So the reservoir, you bring the water up, bump up the grade, and then it goes through a chemical technical process, and you end up with lithium that's going to go into a battery of the future. This is the future of the way lithium is going to be extracted. And this is
the cost. The cost must be a lot lower.
Oh, and the footprint and the time. Who wants to evaporate for 12 months in the Atacama when this process just happens like a continuous water loop? Now, we went with staking projects in Alberta and Saskatchewan. I believe we are, if not the world's largest land lease holder for petrobrines, if certainly one of the 2 or 3, but I believe we are the largest. We have 3,700,000 acres, which we did very quietly. We acquired these concessions in Alberta and Saskatchewan when the market was terrible. After the Lithium 2.0 boom fizzled, it was a bear market, and we created this. One of my partners in the deal is Rob Shuchuk from Alberta. We acquired a group of petro engineers in Alberta who know the industry and what's going on. And then Paul Matisik joined on. He's one of my directors. He's someone who sold 7 natural resource companies, 2 of them involved in kind of the lithium potash spheres. And this company, we last year, 13 months ago, Karl, you can't make this stuff up. When the market was on fire, we raised money at $1.50 a share. The company has 37 million shares outstanding. And then we went public on April 1st of this year. Our entire peer group went up about 10x. And 2 of them still have market caps close to $1 billion or north of $1 billion. And our other one comparable would be E3 Lithium. So we IPO in April of this year. And of course, the market's terrible. And the share price just continues to dribble away. It's now trading at 70 cents with 20 cents a share cash. And
okay, and how many shares out now?
37 million. 37 million shares out. So we have fallen in sympathy with a terrible market. And I believe the delta will close between our peer group and Lithiumbank. We are going to be delivering our first preliminary economic assessment, which is being completed by Hatch Engineering. This is going to be a document that is going to enable us to have a net present value on our first project called Boardwalk, and that will be delivered in the coming weeks. We are delayed on that. We've been waiting for a couple of important field studies that had to be completed. One was water flow. We put that release out today. One of the most important factors is the ability to continuously run a large volume of water. Well, our numbers that we put out today are world-class, best in class, blue ribbon, right? And that's going to feed into the PEA and a couple other important studies that had to be completed. Those are now completed, and the PEA is going to be tabulated, and it should be delivered to the market in the very near future, which is going to, I believe, is going to close the gap on some of our peer groups. So what are the headlines here? We still have $4.5 million in cash that we're not going to the market. We raised a lot of money at $1.50 a share, and the market is just fallen in sympathy. So you're now able to buy or speculate on a lithium share with 37 million shares outstanding, a world-class team, still going to have $4.5 million in cash, which means no dilution, Karl. What will happen with those 37 million shares? Our market cap today is about 25 million. With 4.5 million in cash. This is ridiculous when you compare it to the peer group. So it is once again, I think, a very important or it should be a very compelling speculation. for anyone, if they've ever bought a lithium share, particularly for those that have bought a lithium share that's in direct lithium extraction, they should be looking at Lithiumbank. It's the story, it's got a small share count, and we got a lot of momentous company changing events that are going to occur between now and Christmas. And the PA should be delivered well before that. And I'll be doing a lot of marketing starting in November on the Lithiumbank story to really explain that. And ideally, we need to have the PA to really point at it. And then the analysts can go and talk about where we sit within the future of lithium production. And the numbers, I can tell you, Karl, are going to be world class. We have just under 6 million tons of LCE on one contiguous project. We're not conglomerating. A lot of guys are talking about a big number, but then they're talking about 5 projects. This is one singular project, and that's going to feed into this PA. We have 2 other world-class projects. Don't want to confuse people. We should be able to have a good valuation based on this one single project. Listed on the TSX, and the symbol is LBNK. And do the work. There are some research reports that have recently been circulated. One was done by Red Cloud on just to explain direct lithium extraction and why it too, they believe it's the future. Otherwise, we're just not going to get the lithium. So where are they going to focus? Chemical companies and technology companies? DLE. We're at the not the last mile. We're at the last 50 meters, Karl. And this is where, as they say, go where the puck is going to be. And this is where it's going to be able to satisfy a lot of future production for the world, from not just our project, but projects like this. I just like the way we're located in Alberta, in an extractive industries economy. And it's something that I believe bigger companies are going to really want to be looking at.
Yeah. So what is it about Alberta that you like? You probably don't have the same tax advantages there. You might be able to take advantage of some superflow stuff. I'm not sure. You won't even need that anyways. But what is it about Alberta that you like?
Well, Alberta has billions of dollars of existing infrastructure, pipelines, oil wells, and manpower. Tens of thousands of people work in this industry. We're talking, the petrobrines I'm talking about come, the sampling we did, and the reason we were able to do it so cost effectively, so time efficiently, because we're using existing oil well infrastructure. We're sampling water at various depths from those wells. Manpower's there, the pipelines are there. The Alberta government themselves, and this is the most important future pillar of the Alberta economy is this. This is in their own words. They're helping this along. And it's the same workforce, person for person. And then you layer in, of course, the technology and chemical companies that are there for the final process. But this is a technology story for Alberta. This is extremely important. This is very exciting. And it augments their existing industries, including workforce. So, and the tax rates are efficient or attractive. And you're right, there is those flow-through opportunities. But I would say, if you're looking at the future location, which is going to be the number one location for this type of industry, Alberta is going to be the top.
Okay.
And it's so I don't have to promote that. This is something that's well understood. Especially with even the Canadian federal government is talking about championing this, and they're making these different collaborations with different countries and different companies. Volkswagen, GM, the Korean government was recently in Canada. Well, where do you think the lithium is going to come from?
This is where I was going to go, right?
This is one of those locations. People just, like I said, look where's the puck going to be? The commodity is only going to be more important. The way it's extracted is changing, and it's changing to the benefit of direct lithium extraction and location. This is the optimal location for this type of industry.
So, yeah, I know for sure that the provincial government out there in Alberta would 100% support these efforts. That's no surprise. Federally speaking, you look what's happened out there in Alberta, and there's this big push-pull with the government, right? Because they, the Liberals, let's face it, right? They could help the world with oil output and support it, but they don't seem to want to do that. However, they do want to lower our carbon footprint. And they're trying to push this electrification situation in the world. So yes, that's not necessarily lowering your carbon footprint from a mining perspective, because you absolutely have to mine to still get what you need to put in an EV battery. But where does the Liberals and the federal government come in when it comes to mining for this stuff? Are they supportive, or do they contradict their you know, the whole oil mining situation? Like, I mean, where are we at with that?
When you're talking about salars, the evaporation of lithium, the footprint is gigantic. When you're talking about hard rock mining for lithium, it's a conventional open pit, typically open pit mining operation. The footprint for direct lithium extraction is very small, Karl, and it comes from existing infrastructure. And we're talking about water that's very deep, 3,000 meters, 4,000 meters deep. Okay, so that water is pumped up, which is briny.
Right.
You can't farm with it. You can't do anything with this water. It's got too many impurities in it, but it's rich in lithium. You strip the lithium out. First, you increase the grade, and then you strip the lithium out, and then you re-inject the water, and it goes back to that depth again. This is the lowest footprint operation. I would not call this mining. This is the extraction of water, brine water, goes through a chemical technical process and is re-injected. So its time happens almost instantaneously as that flow of water can happen. And it happens in a very small area. That is why everyone is so interested in this type of extraction for lithium.
Yeah, well, sorry, I mean, I need to be more educated on this process here.
Yeah,
It
sure.
obviously, it sounds like
the industry is, as the industry is. So what are the knocks on this? People say the grade is too low. We don't care about grade. You're able to lift the grade very easily. Well, I'm talking about lifting it 30 or 40 times. That's a simple process. We don't care about that. What you need is the ability to move large volumes of water. And that's dependent on the geology you have. What is the geology? What's the porosity? How will it work? We put out news today that demonstrates our project is world-class. It's world-beating. These are huge volumes of water that we're able to move with the project, right? So that's an important characteristic. You have to also look at the pH and the chemistry of the water. If they're not beneficial, that's a problem. We have very good pH and chemistry with our reservoir. So the grade we're able to bump up. So these are all the little things. I'll say it again. It's millimetrical progress, but in the end, all the collateral benefit of all those companies working on this are talking about Shell. I'm talking about Exxon. I'm talking about Koch Industries. They're all interested in direct lithium extraction. Why? Because it's the future, in my opinion, of the way lithium is going to be extracted, not from the salars of South America, and less so, still so in hard rock mining, but less so. More so is going to come from these deep reservoirs in places like Alberta. And who else has 3.7 million acres like Lithiumbank? I don't think there's another company in the world that has it listed, has the cash that we need to complete our jobs. And for the junior mining speculator, the magic word, 37 million shares outstanding. That is a very low share count with cash still in the till. We own shares. Like Copperbank, like Faraday, what I don't want a salary, small meager salary that we take, or whatever the small monthly stipend that I take. I want a high share price. That's why if we could have a good market cap like our peer group, $1 billion, $800 million, $200 million. That's our peer group. Well, what does that look like with 37 million shares outstanding? That's a hell of a share price. We're trading at 70 cents. So something has to shift here. And perhaps the market's waiting for us to deliver that document, the preliminary economic assessment, which is our first economic model for our Boardwalk project. And then our follow-on project, which is located about 30 kilometers, 40 kilometers south of Boardwalk, Park Place. Sorry to use the analogy from the board game, but we believe they're that important, these two projects. We're able to use all the knowledge and all the information we learned from Boardwalk. We're able to layer that right into Park Place. That's going to happen very quick. Resource.
I love the names.
And
I love the
PEA.
names.
Cost effective, time efficient. That's the key here. That's the key. And so we're hyper focused. This is my one project. I'm working on this very aggressively, waiting just like everyone else, anticipating for this long-awaited PEA. I mean, we've been talking about getting it for this fall, but it's not like you're waiting 2 years, which a lot of mining projects have to wait a long time for economic models. This has happened relatively quickly, and it's going to be delivered to the market here in very short order. I'm talking in the next coming weeks here.
You talk about doing marketing in November, and I understand why you're waiting. But one of the best ways of getting free marketing is having someone like Elon talk about your company. And I'm only thinking of Elon right now because he always talks about trying to trying to get, bringing stuff out of the earth in a clean way. This obviously suits that narrative, right? So has he mentioned anything about this extraction process, and he would look for lithium from companies like this? Has he said anything?
No comment. So I can't
Okay.
comment on that whatsoever. But like I said, chemical companies, technology companies, automotive manufacturers are all extremely interested in direct lithium extraction. I mean, that's all I'm going to say.
I know.
This is
you mentioned
this is the future. This is the future. We are not going to be able to get 1,000% growth in demand of lithium from salars and hard rock mining. Not possible. So either we don't get the batteries, or this is something that goes to commercial scale. Not just our project, but other projects. That's the future.
You're making me more curious here, because you mentioned some really big names in the industry, but you didn't mention Tesla, right? So
they're in. I'm saying Exxon, Total, Shell, Koch Industries, they're in already. They're in. They're interested. They've invested. They've allocated capital to the various companies that are doing DLE. Lithiumbank has no partner as yet. Stay tuned.
Got it. Okay. So this has been a great interview, Gianni. I really appreciate this. Please, forward my information off to any of these companies. I'll interview them. I'd love to hear more about the extraction process. If there's anyone that comes to mind that can kind of explain it to us a little bit better.
Kevin Peatgrass, our chief operating officer. He's an engineer. Lives on the West Coast. He's the one. Yeah. Okay. Cool. Him and his brother are both petro engineers.
Okay. How would you like to close off the interview today? I mean, it's been fantastic.
Well, I think people, yes, it's nervous times, but that's, if you don't put capital at risk, you can't make a return. And so follow the DNA of your favorite copper junior. It has an all-time high. It has a desperation low, especially if it lived through the COVID V-shaped recovery. And copper prices are not going to $2 a pound. You don't have to worry about that. Inflation is a factor too, right? And the US dollar has been very strong. So that's something we didn't talk about, but that's one of the reasons, if copper was $4 a pound, the US dollar was 15-20% stronger against every currency in the world. And gold and copper, they're currencies. Logically, they fell too. That's another factor. But it's not, copper's not going to $2. So it's not something you have to wait. I think you look at it 15% of the time, there's euphoria when you're following the copper price and copper juniors. You're not going to have to wait 7 or 8 years for that euphoria. My gut feeling is that it's going to happen very quickly, meaning within the year 2023. So
sure.
Otherwise, we've already got a big problem in the copper industry. It's already very tight, and inflation will eventually abate itself. And if we're in a recession, we probably already are. Recessions don't last many years, 2 quarters, 3, 4. Who cares? It's already very negative times. Inflation is already biting. Energy costs are high. People are not spending. Already underway. It's already, I would almost say, factored in. And the wild card, of course, is the war thing escalates to some ugly next phase. And that next phase, of course, is something no one wants to talk about. But that would put a kink in the plan.
Well, Gianni, on behalf of our community, I just want to say thank you very much for this very passionate interview today. It's been great. I look forward to probably following up with you a lot sooner than I have from when we did our last drive in Vancouver. I wish you nothing but the best and safe travels out there in Croatia. Thank you. I'll be in Switzerland and Germany in November for a couple of shows. So I'm actually doing keynoting the Precious Metals Summit with Pierre Lasson's there, myself, and Rani Stufferli and Felix Zulauf. So the 4 of us are. Where is that taking place? That's in Zurich on November 14 and 15. Invite only, 200 various accredited investors. And it should be good. I'll be doing the lunch keynote, the lunch entertainment on day 2. So it should be fun. Awesome. I'll look forward to grabbing some content from there and sharing it. Okay. We'll be in touch. Okay, take care. All right. Bye. All the best.